Hello, this is your daily dose of financial market trends. Broadcom just dropped over 4.5%, while gold surged nearly 4%. And the reason might tell us everything about where the market's heading next. Heading into today's session, yesterday's close had the S&P 500 at 7,108, up about 0.2%. The Nasdaq finished at 26,331, also up about 0.2. The Dow closed at 53,463, gaining roughly the same. Volatility ticked up slightly with the VIX at 1535, while the 10-year Treasury yield pulled back to 4.65%, down over 1% on the day. Let's talk about what's really moving today, starting with Broadcom. The semiconductor giant is dropping hard, down more than 4.5%, and it's lighting up across multiple data streams right now. Social chatter has exploded, volume is running nearly double normal levels, and the stock reports earnings next week. What's interesting here is the timing. Broadcom isn't falling in isolation. This pullback is happening against a backdrop of rare earth supply chain concerns that are putting pressure across the entire chip sector. When a major player like this stumbles right before earnings, it often signals broader anxiety about input costs and supply security. Meanwhile, gold is doing exactly what you'd expect in this environment. The GLD ETF jumped nearly 4%, with volume running 60% above average and social interest spiking hard. Gold doesn't move like this unless investors are genuinely worried about something. We're seeing classic flight to safety behavior here, money rotating out of risky tech plays and into hard assets. The divergence between gold surging and semiconductors falling is telling you a clear story about risk appetite right now. The Nasdaq 100 ETF, QQQ, is catching attention too, down about 0.2%, but generating serious discussion across social platforms. When the ETF itself becomes the story rather than individual stocks, it usually means investors are thinking in broader themes, questioning whether the whole tech rally has legs. And speaking of tech, Nvidia is down nearly 1% ahead of its earnings report next Tuesday. The AI chip leader is facing the same rare earth supply headwinds as Broadcom, and investors are clearly nervous about what management might say about input costs and supply chain stability. Rounding out the movers, AMD dropped over 3.5% on news about its dirt-cheap AI chip strategy. But questions are swirling about how they'll actually finance this aggressive play. And in crypto, Ethereum jumped nearly 2% on unusually heavy volume, after a trader reportedly lost $24 million in 12 seconds on an Ether position. That kind of volatility tends to bring out both the curious and the opportunistic. Now let's zoom out to the bigger forces shaping these moves. First up, Federal Reserve inflation hawkishness. Fed officials are sounding increasingly concerned about stubborn inflation readings, and July minutes showed growing unease. The bear case here, sitting at 55% probability, says if inflation stays sticky above 3% and the Fed keeps talking tough or even hints at more rate hikes, Treasury yields will keep climbing and equity valuations will compress, especially in growth stocks. Financials might benefit from higher net interest margins, but tech takes it on the chin. The bull case at 25% says if inflation data suddenly shows meaningful cooling and the Fed signals a pause or potential cuts, yields drop, discount rates compress, and growth stocks rally hard with small caps leading the way. Second, U.S. rare earth supply independence. The administration is trying to break dependence on foreign rare earth minerals, but it's hitting serious roadblocks. The bear case at 60% probability says if diplomatic efforts fail and supply chains stay concentrated in potentially hostile nations, tech and EV manufacturers face sustained disruption risk and rising input costs. Companies with diversified supply or vertical integration will outperform while margins compress industry-wide. The bull case at 20% says if the U.S. secures alternative supplies through Greenland partnerships or domestic production, tech and defense stocks lose their geopolitical risk premium and domestic mining operations see investment flow in. Third, Ukraine war grain export disruption. Russian actions have effectively blocked Ukrainian grain shipments, sending global food commodity prices surging. The bear case at 70% says if the blockade continues or worsens heading into planting season, global food inflation accelerates, complicating central bank inflation fights and pressuring consumer spending in emerging markets. Agricultural input suppliers benefit while food importers suffer. The bull case at 15% says if diplomatic or military developments restore Black Sea shipping lanes, food prices retreat sharply, easing inflation pressures and supporting global growth and risk appetite. Quick look at housing. 30-year mortgage rates sit at 6.67%, while housing inventory has climbed to 9.3 months of supply, well above the 6-month balanced market threshold. With rates staying elevated, the lock-in effect is intensifying, existing homeowners refusing to trade their low rates for today's 6+% mortgages, keeping inventory building and sales growth nearly flat. Earnings-wise, all eyes are on NVIDIA reporting next Tuesday, August 26th. Given everything we just discussed about supply chains and chip sector pressure, that call is going to matter a lot. So what does this all mean for your portfolio? 5 things worth watching. 1. The chip sector is facing real supply chain pressure, not just noise. When multiple major players are falling together on geopolitical concerns, that's a structural headwind worth respecting. 2. The gold surge tells you fear is creeping back into the market. Flight to safety moves like this don't happen unless investors are genuinely questioning risk assets. 3. Fed inflation concerns are back on the table. With officials sounding more hawkish and yields staying elevated, the path of least resistance for rates might be higher, not lower. 4. Housing inventory continues building while rates stay stuck above 6.5%. That lock-in effect is real, and it's creating a stalemate that could pressure prices if it persists. And 5. Next week's NVIDIA earnings just became a critical read-through for the entire tech sector. What they say about supply chains, costs, and demand visibility will set the tone for semiconductor stocks heading into September. As always, this is educational content, not financial advice. Do your own research and talk to a qualified advisor before making any investment decisions. That's your Morning Market Digest for Thursday, August 20th. We'll be back tomorrow morning with whatever the market throws at us next. Talk soon.